Hello everyone, this is XBRL Weekly News and this is edition number 5 from NeoClarus. Let me introduce myself. My name is Somnath Ray. I've been working in the XBRL field for the last 5 years and I'm a CPA with a diploma in IFRS. So in this edition I'm going to cover or continue with navigating the IFRS taxonomy series, and this is part 3 in which I'm going to cover IFRS 3 business combination, and this is in preparation of SEC filings for the foreign private issuers. And I'm also going to cover the data quality issues as detected by XBRL US. So this slide actually talks about the basic objective of IFRS 3 business combination, and we can also see the reference to the extended link in the IFRS taxonomy, which is IF 817000. So what is the objective of IFRS 3 business combination? So the objective is to establish the principles and the requirements in case of an acquisition about how an acquirer recognizes and measures in the financial statements the assets acquired, the liabilities assumed, and the non-controlling interest, and the recognition and measurement of goodwill or a gain from the bargain purchase, and the required disclosures for IFRS 3 business combination notes. So this slide actually talks about the scope of IFRS 3 business combination. So IFRS 3 business combination applies to a transaction that meets the definition of a business combination. So a business combination is a transaction in which the acquirer obtains control over a business, and we see some examples like acquisition of shares or net assets, legal mergers, and reverse acquisitions. So we see two words over here, control and business. So let us define what is meant by control and what is meant by business. So an investor controls an investee when the investor is exposed or has the rights to variable returns from its involvement with the investee, and has the ability to affect those returns through its power over the investee. So there are two components over here. So the first component is the right of the investor to the variable returns of the investee, and the second component is the power of the investor to affect those returns. So these are the two important components of control as we see over here. And then as per IFRS 10, control means the ownership of more than half the voting right of another entity, the power over more than half of the voting rights by agreement with investors, the power to govern the financial and operational policies of other entities under statute or agreement, the power to remove or appoint majority of directors, and lastly the power to cast a majority of votes. So that is the definition of control. So what is the definition of business? So business, we can define it in a very simple way. It is actually an integrated set of activities and assets capable of being conducted and managed to provide returns including dividends and cost savings. So the basic objective of business is to generate returns in the form of dividends and cost savings. So we see some exceptions for the scope of IFRS 3 business combination. So IFRS 3 business combination does not apply to joint arrangement, the acquisition of an asset or group of assets that does not constitute a business, a combination of entities or businesses under common control, and the acquisition or in case of an investment in a subsidiary that is required to be measured at fair value through profit or loss. So let's look at recognition. So as of the acquisition date, the acquirer shall recognize separately from goodwill the identifiable assets acquired, the liabilities assumed, and the non-controlling interest in the acquiree. So about the measurement, so the acquirer shall measure the identifiable assets acquired and the liabilities assumed at their acquisition date fair value. So that is this is very important, acquisition date fair values. So the identifiable assets acquired and the liabilities assumed have to be measured at acquisition date fair values. And then this slide talks about the acquisition method. So the first step is identification of the acquirer. So as per IFRS 10 consolidated financial statements, the entity that obtains control of the acquiree is the acquirer. And the next step is to determine the acquisition date, which is the date the acquirer obtains control of the acquiree. And then the third step is the recognition and measurement of assets, liabilities, and non-controlling interests. And the fourth step is the recognition and measurement of goodwill or a bargaining purchase, which we are going to look in the next slide. So in this slide we are looking at two items, that is item A and item B, and we are looking at goodwill and bargain purchase. So let's see how we calculate the goodwill and the bargain purchase. So item A is basically the aggregation of the consideration transferred at acquisition date fair value, the amount of any non-controlling interest in the acquiree in a business combination achieved in stages, the acquisition date fair value of the acquirer's previously held equity interest in the acquiree. And item B is basically the net of the acquisition date amounts of the identifiable assets acquired and the liabilities assumed measured in accordance with IFRS. So goodwill is actually the excess of item A over item B, and bargain purchase is the excess of item B over item A. And in case of bargain purchase, the acquirer shall recognize the resulting gain in profit or loss on the acquisition date. So that's all about goodwill and bargain purchase. So let's move on to the next slide. So this slide actually talks about some of the important disclosures, and the name and description of the acquiree, the acquisition date, the percentage of voting interests acquired, the primary reason for the business combination, and a description of how the acquirer obtained control of the acquiree, the acquisition date fair value of the total consideration transferred, and the acquisition date fair value of each of the major class of considerations such as cash, other tangible or intangible assets including a business or subsidiary of the acquirer, the liabilities incurred, for example a liability for contingent consideration, and the equity interests of the acquirer including the number of instruments or interests issued or issuable, and the method of measuring the fair value of those instruments or interests. And also for acquired receivables, it says that we need to disclose the fair value of the receivables, the gross contractual amount receivable, and the best estimate at the acquisition date of the contractual cash flows not expected to be collected. So those are some of the major disclosures which we require. Now let us have a look at the IFRS taxonomy extended link role 817000 to look at the elements for this IFRS standard. So we are looking at 817000 notes business combination extended link role. So let us expand this. So we find several text blocks over here. So we find a very important table, disclosure of related information and about business combination table. So we have business combination access, and so we have a few members over here, entities total for business combination member and business combinations member, and aggregated individually material business combinations member. So we have these line items: name of acquiree, description of acquiree, date of acquisition, percentage of voting equity interests acquired, description of primary reasons for business combination, description of how acquirer obtained control of acquiree, description of factors that make up goodwill recognized, and we find acquisition date, fair value of total consideration transferred, abstract. So under the abstract we have cash transferred, other tangible or intangible assets transferred, liabilities incurred, equity interests of acquirer, and we have two children under this parent, that is number of instruments or interests issued or issuable, description of method of measuring fair value of instruments or interests, and then this is the total consideration transferred, acquisition date, fair value. So these are all the elements over here, and let us go scroll down a little bit. So this is also a very important table, the disclosure of reconciliation of changes in goodwill table, and we have over here goodwill at beginning of the period and goodwill at the end of the period, and these are the changes, these are the reasons for the changes. And then we have disclosure of transactions recognized separately from acquisition of assets and assumption of liabilities in business combinations table. So this is also a very important table, and these are the members. So basically these are the line items for this table. So let us scroll down, and then we have disclosure of contingent liabilities in business combination line items, and these are all the line items. So this is the location of the IFRS taxonomy, where we can find all the elements for the disclosure for these notes, that is 817000 business combination. So let us now move over to the next topic, which is XBRL data quality issues as detected by XBRL US, and we are going to look at this at the XBRL errors with the help of SAP Lumira Visual Intelligence. So let us drag and drop one of these charts. So we are seeing a tree map over here, and let us expand this. So we are seeing that invalid access member combination, which is affecting the comparability of XBRL data as of today, that is September 25th, stands at 1.248 million. And then we have negative value reported for a concept that is expected to have a positive value, which is affecting the accuracy of XBRL data and affecting the financial semantics as well, stands at 587,595. And then we have incorrect date, which stands at 481,593, which is affecting the accuracy of XBRL data. And then we have required value that is not reported. So this is affecting the completeness of XBRL data. And so these are the other. Then we have incorrect calculation weight used, so that's 59,309. So that's affecting the financial semantics. Then we have calculation errors, which is 40,848. So, and then we have missing calculation link basis, which is a very serious error, which stands at 70,267. So these are some of the major errors. Now we can look at this information through a bar graph, and let me change the formatting a little bit over here. So let me change the color of the data labels to blue, and let's open this up. So calculation error is 40,848, and then changes in base taxonomy affect element usage, so that's 119,634, and then invalid line item used with an axis, that's 164,926, and then negative value reported for an extension concept, that's 17,984, and then we have value reported for a concept appears unreasonably large or small, that's 178,670. So let us look at the growth in these errors over a period of a month, that is from August 25th until today. So let's pull one of these tree maps over here. So we are seeing the growth in the XBRL errors from that is the increase from August 25th until today, that is September 25th. So within a month we see that duplicate extension concept has grown by 17,279. So that's a huge growth rate, and duplicate extension concept means that extensions are being created although we have standard US GAAP tags. So this is affecting the comparability of XBRL data, and then we have invalid access member combination. The growth is 13,517 over a period of 1 month, which is huge in number. And then we have incorrect date, which is 6,410, the growth within a month, which is also very large. And then we have negative value reported for a concept that is expected to have a positive value, and the growth is 4,221, which is quite large. And then we have required value that is not reported, which is like the growth is 3,269 over a period of 1 month. And then we have context date is subsequent to the period reported, and the growth is 1,618, which is also huge in number. And then we have value reported for a concept appears unreasonably large or small, and the growth is 1,345 over a period of a month. So these are some of the important growth rates in the errors. So let us move into so at NeoClarus we are constantly researching about the XBRL errors. And so the basic advantages of having NeoClarus as the partner in SEC filings is that we are a technology company and we are exclusively focused in disclosure management solution, XBRL audit, and data services. And we have a team of professionals from the IT field, and we have licensed CPAs and IFRS certified accountants who are experienced in interactive data modeling with the US GAAP and IFRS taxonomy. So those are the basic advantages of having NeoClarus as a partner for your filings, for your SEC filings. And so about NeoClarus, we have actually 3 services, which are XBRL disclosure services, XBRL audit services, and XBRL data services. So for XBRL disclosure services, we have the NeoClarus iFile solution, which is a web-based, collaborative, easy-to-use solution. And for XBRL audit services, we have the NeoClarus iAudit solution, which is meant to validate the XBRL data. And then we have the XBRL iParser solution, which is for our data services. So that's all about NeoClarus. So thank you for watching this video, And if you have any questions, you can give us a call at 408-796-1533. You can also reach me at my email, that's somnath@neoclarus.com. Thank you very much, and thank you for watching this video.